All right, everybody, testing 1, 2, 3, testing 1, 2, 3. Type a 3 in the chat if you can hear me and see my screen, please. Type a 3 in the chat if you can hear me and see my screen. Thank you, Mr. Donald, Franklin, WC, Marcel, Jim again, Andrew. All right, so sound good? Sound good? We're going to give this about another 30 to 45 seconds here, just to allow everybody to continue to get in, and make a couple of adjustments here on my slide, and we'll go ahead and kick this off and get started. I'll be right back in about 45 seconds. All right, gang, let's go ahead and get started. I want to say welcome. It is 7 p.m. Eastern, or 7:02 p.m. Eastern, 6:02 Central in my neck of the woods. Welcome to the presentation. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. And if you are here or registered to see 3-point price action formula to spot market reversals, you are in the right place. So who all here has seen this presentation before? Give me a shout out if you have, or do a shout out if this is your first time. I want to say welcome. I do appreciate everybody taking the time out of your busy lives and your schedules to attend today. I thoroughly, and I mean it with all my heart, enjoy doing these presentations, especially this one, because it's something that I actually use. Been using it for almost 15 years. I will teach you a very precise, mechanical, actionable strategy that you can literally walk away with probably in the middle of the presentation. I hope you stay around at the end, but something you can start applying tonight if you want to trade tonight, or maybe at least tomorrow. So look forward to teaching that to you. I do encourage you to ask all of the questions that you wish. I'm probably not going to answer them during the presentation. I want to make sure we get through the meat of the PowerPoint and the strategy, so I can actually show you what I'm talking about. But I will promise that I'll come back and answer all of your questions at the end. In fact, stick around. We'll take a look at your symbols. We'll take a look at what happened in today's market. Obviously, we've got a lot of volatility going on here, starting to pick up as expected, with being September, where we are, or where we were, I should say, with the loftiness of the overall market, and of course all the crazy outliers we got going on, whether it's politics, corona, whatever whatever it is, we expected some volatility. So I'll show you exactly how things are shaping out. So let's go ahead and get started here. I'm glad everybody's doing okay and you can hear me, and it looks like we've got clearance to pass, go, and collect our 200. Risk disclaimer: we must always start with the risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results or a substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So what this means, in short, the Cliff version notes are: don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. You can lose money in trading. I'm sure everybody's familiar with that. While you're reading the rest of that, tell me where you're from. Where's everybody tuning into? I am in southern, or LA, not Southern Cal, LA, but LA as in Lower Alabama, if you can't tell by my funny accent. Welcome all the first timers here. Excuse me. I've got Reno, Low Forward from Colorado, the Valley in LA, probably not the Valley in Lower Alabama, Orlando, South Jersey, Ontario, Nolans, nice. I miss New Orleans, Sherman, Texas. Already somebody tagging at my heartstrings, Roll Tide. Calgary, St. Augustine, beautiful place. Vegas, would normally be heading out there this November for the Traders Expo, but probably going to pass this year. We may still go out there for a small gathering. South Africa, welcome. London, UK, welcome. Tampa, nice. All right, people from all over the world, I don't want to waste anybody's time. I know, we've got a very limited amount of time in the day, so I want to make sure your time is worth it. So let's go ahead and get started. Welcome from all over the globe. I'm going to start off here introducing myself once again. My name is Silas Peters. I'm a proud husband, also father to these beautiful blonde-haired beauties on the screen here. These pictures are just to show you that I am a real human being. I like to hang out with my family in our limited free and spare time. Now they're back at school, but especially during this whole Corona conundrum, over the last several months, love to get out on the bay, do some kayaking, boating, hanging out at the beach, and so forth. So 3 days after I graduated University of Alabama, I actually sold my car, packed up my belongings, and I headed north, or straight north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug immediately, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asia, and European sessions, primarily working large block order flow for hedge funds, banks, CTAs, large force spectators, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales and support. Worked as a private family office investment consultant. Have held these various futures and securities licenses. And then in 2016, I launched Cecil Swing Trader. And then also exciting news, in 2020, we launched our registered investment advisory, Blue Marlin Advisors, where I'm a partner and co-founder, so we're excited about that. My journey as a trader wasn't always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. I blew up an account, then I blew up several others in what I like to call revenge trading. I'm sure some of you can attest to that. Finally settled down, went back to my roots, worked my process, and found overall consistency. Enough about me, let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I certainly hope it does not. This is actually not my desk. This is a internet that I pirated, if you will, off the internet. I thought it was funny at the time because I feel like it's the perception of what those on the outside looking in think this is what our desks look like, that we're crammed down in a basement surrounded by dozens of monitors, looking at these lines zigging here and colors blinking there. Certainly not. Now, my desk did look very close to this in Chicago for obvious reasons. I've since pared back to a handful of monitors for charts, quotes, execution, and the internet for day-to-day operations. And a lot of people, yeah, of course not, hell no, I see one. So he says 8 monitors. Well, that's great. But to me, all this does is leads to this slide, and that's paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my digital hand. Been there, done that, got the t-shirt. It's no fun. Who has done all the analysis they thought they could possibly do? Cross the T, dotted the I, put their finger on the mouse, get ready to pull the trigger, and then what happens? Some line crossed this line, or something happened to negate your overall analysis and your thought process, negating the trade. So a lot of people absolutely are, and it's really a common theme. It's a sad theme. And hopefully what this strategy that I'm going to show you today will help eliminate the paralysis analysis demons. So what do you trade? I appreciate the interaction so far. You trade stocks, options, futures, Forex, maybe even cryptocurrency. I like to see who I'm talking to. Well, tell me what you trade. I trade stocks, options, futures, and Forex on an active basis. Don't trade cryptocurrency on an active basis. I do have accounts across the internet that I don't even really know how to get into half of them. I view it more as a lottery ticket, if anything, but I do trade all these on an active basis. So we've got stocks, futures, stocks and options, Forex, FX, options, stocks, options. Now futures in a past slide, crypto, there you go, one crypto guy. Options and futures, learning strategies, stocks and options, awesome. So yeah, I really like to see what I'm talking about, and I'll tell you, most of the time it's, equities, options, equity options. Those are probably what most people are trading, followed by futures, Forex, and then probably crypto last. But it doesn't really matter. You've got to trade what works for you. And what I'm going to share with you today works in all those markets. It's highly accurate. It's profitable. Works in all markets, as I just said, all time frames. And it's 99% mechanical. Most importantly, it's simple. So we're not here to teach rocket surgery today. We're going to learn a very simple mechanical system. My agenda promised you is we're going to learn that simple mechanical setup together. That is repeatable regardless of the market or time frame. So at some point, I'm going to ask you, have I fulfilled my promise? You can answer as honestly as you'd like. I hope to see a lot of yeses, but you can be honest and tell me if I fulfilled that or not. Speaking of promises, if you're here, you may have seen or read something about a $10,000 trade promise. Well, I'm not going to promise you anything in trading or in life, but these were trade promises or setups, I should say, that we talked about in multiple free presentations, such as this one. We talked about a potential $10,000 trade setup in crude oil futures here. You can see on the left, RBOB unlead on the right. We also had a third one in nat gas. They triggered based on the strategy I'm about to show you, and they went and met their $10,000 trade setups and then some. We also talked about markets in coffee and OJ, these sleeper markets. Why were they sleeper markets? Well, they were getting quiet. We're starting to bottom out. And you can see here from a 5, 15, and 30-year historical price perspective, that's exactly what, from a seasonal perspective, that's what they were doing. And that's what they were doing in real-time price action. Does that mean that we went and bought these markets? We went and bought coffee, OJ, we bought call options, call spreads, sold put spreads? No. We sat on our hands and wait patiently for the setup and pattern, the one I'm about to show you, trigger, and that's what happened. They went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about sleeper markets in corn, beans, and wheat. This one, corn on the left, beans on the right. Again, you see it from a 5, 15, and 30-year historical price perspective. Markets tended to get quiet at this time of the year. That's exactly what was going on. The markets were getting very quiet, slowly drifting to the downside, almost being lulled to sleep by market participants. We had favorable weather out in the Midwest. All the stars were starting to align. Does that mean that we went and got long these markets? No. We said, wait for the pattern to occur, the one that you're about to learn, to trigger, and that's exactly what happened. They triggered and then went on and met their $5,000, $6,000, and $7,000 per contract price objective. Now, this presentation is not all about futures. It's not all about commodities. I'm just trying to show you that they happen over and over again, and I will prove it to you throughout the presentation. So who here is ready to see that setup responsible for these very recent trades? I'm talking about very recent trades here. This S&P chart could be updated. It's actually 800 points, 800 S&P points on the S&P, 160 points here on cocoa, 300 pips on the Aussie Kiwi, and two $20 or $40 trades here in Facebook. So exactly, all right. So I appreciate the enthusiasm. You're ready to go. Otherwise, you probably wouldn't be here. So let's get right to it. It is, drum roll please, the 1, 2, 3 pattern, also referred to as a 1, 2, 3 top or 1, 2, 3 bottom. So I'm sure we'll have some wise guys that say, oh, this is old hat. I already know this. Bye. Well, hey, If that's the way you feel, fine, but I'm going to show you or help enlighten or maybe have a light bulb moment for you on why this is so powerful. It's one of the most fundamental technical patterns in the textbooks. We're talking about technical analysis 101. So if you've heard of it, and let me just ask, who's heard of the 1, 2, 3 pattern? I didn't invent it. It's been around for hundreds of years. A lot of people here are familiar with it. A couple of people know, and that's fine. If you've heard of it, you're going to probably say, well, why in the hell am I not using it? So let's take a look at it. The setup is price action based. The pattern is comprised of a low and a higher high and a higher low and a break of that higher high. In the case that we're going long, same rules apply, but inverse when we're going short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So you'll probably see in a little bit, hey, this is a counter trend strategy or a reversal type strategy. And in essence it is, but we're going to talk about ways how we can filter these things out to even increase the odds. I will stress it works extremely well when the pattern sets up as significant, important areas of support and resistance, other high probability technical patterns such as head and shoulders tops and bottoms, double tops, double bottoms, and more. Let's look at the mechanics. Let's start here with the 1, 2, 3 top. This could be Peloton. This could be a daily chart of Cisco. This could be a 5-minute chart of the Mexican peso. It doesn't really matter. We're learning the basic principles here. So here we have 0.1, which is the highest peak. When we find that resistance and then move down, that gives us an established number 1 point. Market trades lower. Once we stop making these higher lows and pull up, we get an established number 2. Market retraces higher, pulls back, giving us a number 3. Market could have come up here, or up here. As long as we don't take out the number 1 high, we have a 1, 2, 3 top. Now, a 1, 2, 3 top trader knows that we're looking to get short on breaks or closes below the number 2, and that's exactly what happened. Here's a 1, 2, 3 bottom. Same rules apply, only in inverse. Again, doesn't matter what market this is or what time frame. It could be anything. Here, the lowest low at support gives us our number 1. Market trades higher, pulls back, giving us our number 2. Once we come down and stop making these higher lows and pull up, we get an established number 3. 1, 2, 3. 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. We don't get that, or we don't know what happened with the continuation of this, but that's where we would be looking to get long. Let's look at a 1, 2, 3 pattern for the top strategy. This is a daily chart of the Aussie dollar, the 6A futures that tracks the Australian dollar. If you don't trade futures, you could look at the ETF FXA, or if you don't trade ETFs or futures, you could look at the Aussie US pair in Forex. So in this example and the subsequent examples, we're going to really kind of look at the daily chart. That's no ironclad rule, nothing set in stone. We'll talk about ways later where you can dial it in to even tighter. So every, say, 6 months, 3 months, or shorter to find more opportunities. But for this purpose, we're going to look at 52-week. All right, so we have a red one circle. Why? It's a 52-week high. Market trades lower. Once we stop printing lows and pull back, we get an established number 2. We only retrace higher by about 4 bars here and then pull back down, giving us our 1, 2, 3. Market could have come up here, or up here. As long as we don't take out that number 1 high, we have a 1, 2, 3. Now, what are the rules? We're looking to get short on breaks or closes below the number 2, which is exactly what we get right here. So in essence, that is pretty much the rules. You've already figured it out. But what about the other important parts of the recipe? Like, where do we put our risk or stop? Where are we taking profits? Where are we putting our target levels? All very important ingredients. Our risk, or I should say our initial risk, is above the high of the number 1 right here, above the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2, measured down. We measure from here to here and then down. And that's about 225 ticks for $2,200 per contract in this example. So you'll notice immediately we are at a 1-to-1 risk reward ratio. Risk here, target here, 1-to-1. But it's very important to allow the market to materialize in your anticipated direction, which it does more often than not. So once we start breaking down in our anticipated direction, we can adjust our risk usually fairly quickly. Where would be the next logical area to move our risk? Above the number 3 high, exactly. Next area of resistance. So we're starting to break down. We can quickly cut our risk down to above the high of the 3, cutting it by 50, 60, or even 70%. So get another 1, 2, 3. This is in a daily chart of Walmart. Here we have a red number 1 circle. Why? It's a 52-week high. 1, 2, 3. We already know what 99% of other traders are struggling with looking at this exact same chart. Well, where would we get in? Where's our stop? Where are our targets? Where are we taking profits? We know all of that days in advance. We know we're looking to get short on breaks or closes below the 2. We know our initial risk, once triggered, is above the high of the number 1, and our initial target is a distance between the high of the 1 measured to the low of the 2, measured down, which is about $5 in this example. Carol says we have no sound, so I want to make sure that I'm not talking into a black hole. Can everybody hear me? All right, let me respond to her. Always frightens me. All right, I guess Carol can hear me now. All right, we're going to keep trucking. Everybody says good. All right, now we're going to talk about 1, 2, 3 bottoms. 15-minute chart of the E-mini S&P. Now on a daily chart, we're not going to look for 52-week highs or 52-week lows. That wouldn't make much sense. So on an intraday chart, whether it's a tick, 5-minute, 15-minute, so on, we're going to look for what we call session lows or session highs. How do I define a session low or session high? I'm going to go back to the Globex Open. So if you're not familiar with futures or Forex, they open up on Sunday afternoons, trading into the Asian session, into the European session, into the US session, shutting down for about an hour, reopening, rinse and repeat through Friday afternoon. So wherever you start your trading day, I start mine around 6 a.m. Central. If you start yours at the 3 a.m. European session, maybe the 9:30 Eastern New York cash open, maybe the lunch session, maybe the last hour of the day, you're going to be looking for new highs or new lows from that point forward, session highs or session lows. Okay, it's pretty simple. And we'll look at several examples. So here we have a session low on this 15-minute chart of the E-mini S&P, indicated by the red 1 circle. We have 1, 2, 3. Aggressive traders would consider getting long on breaks above the number 2. So you're working a buy stop, a tick or 2 above the number 2 high. You're triggered into the trade. Couple of alternative entry methods that I personally prefer are either to A, wait for the market to come back and retest the breakout area, which it does more often than not, or wait for the market to come and hook back up through the breakout area. See, we bust up, we roll down, and then the market comes back up, so you're getting long in this second attempt higher. So utilizing one of those entry methods, one of 2 things are going to occur. One, you're going to miss out on some potentially winning trades. Sometimes the market will bust up out of the breakout area and zip up to profit target, leaving you at the train station. Don't get your feelings hurt. There's too many markets and other time frames to look at. Always another trade around the corner. But what is it also going to do? Sometimes the market will come up, roll back lower, but you will not get that hook back up. It will continue to fall off and stop you out. So by utilizing this second kind of hook method, will keep you out of potentially false breakout trades. Let's look at a weekly chart of Apple. Hell of a way to catch some longer term position type moves. Here we have a 1, 2, 3 multi-week low, 1, 2, 3, also have a double bottom. Market breaks out above the number 2 here on this large bullish candle. Then we go sideways for several weeks. We come back down, retest the breakout area, and or hook back above. That's our confirmation to get long. How do we participate in these moves? We buy Apple stock, we buy call options, we buy call debit spreads, we sell out of money put spreads, whatever your flavor or style of trading may be. Let's look at some failed trades. They don't all work. Hate to bust your bubble. There's no holy grail in trading, but we're all grown-ups here. I know you already know that. Here's an example of a 5-minute E-mini S&P chart that I probably took in my live account. Good looking setup, getting a little vertical here, trend line break, 1, 2, 3. You're getting short here on that initial breakdown below the number 2. Or if you waited for the hook method, the market comes up, rolls back down, and you're into the trade. Ends up, looks like maybe you're profitable by 1 or 2 points. I'm not real sure the total there. But then the market reverses and decides it wants to go higher. So if you exercise any type of money management, you stopped out at the number 3 resistance here, number 3 high resistance, or if you didn't do anything, you're stopped out at your initial risk level above the high of the number 1. What happens next? We get a new 1, 2, 3 top. 1, 2, 3. This high is greater than that high, so we get a new count. 1, 2, 3. Market breaks down below the number 2. You get a couple of retests. Ends up being a nice profitable trade. Now, here's an example of a no trigger or voided trade. It's neither good, bad, nor ugly. It is what it is. I like it when this happens. I'll tell you why in just a second. Here we have a 1, 2, 3. Looking to get long here, but the market decides to roll over, takes out this number 1 low. We start to count over. 1, 2, 3. Looking to get long, market rolls over, takes out this number 1 low. We start to count over. 1, 2, 3. Looking to get long. We're finally able to trigger long into the trade. Now, what is likely happening in this scenario? Anybody tell me what's likely happening? So what's going on here is we have price action is lower lows, lower lows, lower lows. But if you apply perhaps a oscillator, maybe an RSI, stochastics, MACD, it doesn't really matter. We're likely having some type of divergence. So lows, lower lows, lower lows, but whatever your favorite momentum oscillator is, again, RSI, MACD, stochastics, whatever, is likely making higher lows, or i.e. no lower lows, thus creating the divergence factor. And if that doesn't make sense to you, I'll show you plenty of examples. It's not a requirement, but it's all about putting the odds in our favor. 1, 2, 3 pattern trade management. Again, the confirmation of entry is on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies. If you're only trading one contract, one futures contract, Forex contract, one share of stock, one option contract, I would say go for the distance between the 1 and 2 points. Uncanny how more often than not, it will go tag that often to a tick and then reverse. Now, if you're trading multiple contracts, really, where we all want to be, whether you trade multiple options, futures, Forex, or shares of stock, I would say, hey, take a third off, half, 2/3 of your position off at that distance between the 1 and 2, and then trail your balance, trail the balance of your position. However you choose to manage your trade. Nobody can tell you how to manage your trade. You've got to find out what works best for you. For me, I like to target good old-fashioned support and resistance levels, price structure. But if you want to use trend line stops, moving averages, PAR-SAR, they all come a dime a dozen. You've got to figure out what works best for you. I've already showed you that this setup works in any market where you trade pips and Forex, Pepsi stock, potash or pot stock, pork bellies, or the Polish zloty. And on any time frame, whether you trade a tick, 15 hourly, 4-hour daily, and more, and any trading style, whether you're a position trader, swing trader, day trader, scalper. I'm gonna take a swig of water here. Tell me what your trading style is. What is everybody's trading style? I mean, right off the bat, do have a scalper and then a lot of swing traders. Long and short swing. Yeah, Andrew, that's the same. I don't particularly get married to any bias. I'm happy to trade both to the short and long side. Put seller. All right. Scalp, depends on the market. All good questions. There's no wrong answer. The point is that I'm glad to see that at least those that are participating and typing in that you have a trading style, define a trading style. And if you don't yet, that's fine too. But you've got to find out what your bread and butter is. Just like I said, nobody can tell you how to manage your position. Nobody should ever try to tell you that you've got to trade off of a 5-minute chart or an hourly. You've got to find out what works best for you. And we've all got different educational levels, capital, risk tolerance, things like that, time we can commit. You've got to figure out what works best for you. I've found that the 5 and 10 on the intraday chart. Also learn to really appreciate the 233 tick, which I'll show you at the end of the presentation, the hourly and 4-hour to swing trade currency futures and a handful of commodities, and then daily really for all markets, equity options, ETF options, futures and commodity, outright and options, and FX. All right, so you've seen the proof. Let's look at some real trade examples, not to say what we just looked at were fake examples, but let's talk about some examples we've utilized in some of our services. We start here with crude oil. Everybody's familiar with crude, whether you trade CL futures, maybe USO, maybe other leverage crude or energy ETFs. Everybody is familiar with crude. So you guys and gals can read the text over here on the right. I'm gonna look at the chart and work myself from left to right. We've got these examples here. Let's start with this one. Daily chart, 52-week high. That's why we have a red number one. Number one, 1, 2, 3. It's a smaller 1, 2, 3 top. I'll give you that, but it's still valid nonetheless. We knew before the trade even triggered where our entry was, where our risk was, and where our targets were. We broke down below. We got a couple of retests. We quickly met our $3 or $3,000 per contract price objective. And then we went into consolidation or sideways mode. I get asked all the time, does it work in sideways or range-bound markets? Well, theoretically it should, right? Because we're looking for new highs or new lows, which is what I'm doing. But if you want to trade range-bound 1, 2, 3s, by all means, help yourself. Here's a nice 1, 2, 3 inside this range. Triggers to the upside, ends up being a nice trade, but I'm only looking for new highs or new lows. So we get that. We get a new number one. Why? This high is greater than that high, so we get a new number 1 point. 1, 2, 3. We break down below the number 2. We get 3 or 4 days of retest, confirming a short entry. Let me tell you why I got excited about this setup. Well, one, because of the high probability 1, 2, 3 top pattern that I've been telling you about. Secondly, we are at a time of the year from a seasonal perspective where crude and energy markets in general trend to trade to the downside, okay? When those two things align, it's what I call the perfect marriage in trading. So once this triggered, we got short. How? We shorted crude futures. We bought put spreads. We sold out of money call spreads, traded USO and other leveraged ETFs. We met our $4 or $4,000 per contract price objective, and then the market sold off, and it sold off hard. fact, it sold off another $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. All we did is trail the market until we either got stopped out or we had a potential reversal, okay? And we get a potential reversal here, potential reversal here. 1, 2, 3. We also have probably my second favorite pattern, which is a triangle. That is a textbook, beautiful triangle pattern. And we also have a 1, 2, 3 bottom. In fact, not only is that a high probability pattern, but now we're also at a time of the year from a seasonal perspective where crude and energy markets tend to trade to the upside. Probably one of the better seasonal trades I have in my back pocket. But what happened? It broke to the downside to the bottom of the triangle, which it should, as it's trading in its continuation pattern, sells off another $10 or $10,000 per contract. We finally get another flush low down here in a new 1, 2, 3 bottom. 1, 2, 3 triggers above. It's our $5 per contract price objective. Now, I want you to remember this chart and the subsequent charts because I'm going to show you something really special towards the end. Here's another market that everybody loves to talk about. This is gold. This is actually GLD, the ETF that tracks gold futures. If you want to start with the ETFs, that's fine. I like to look at the futures chart first because they're a lot cleaner, a lot more fluid. You're not going to see all these gaps, but regardless, you're going to see the same pattern setup. So here we have a 1, 2, 3. Market breaks below the number 2, gives you a couple retests, swoops down and reaches our $4 profit objective. Here all we do is now we wait and look to flip to the long side. 1, 2, 3, double bottom. Market comes up above, retest, it's our $2 profit objective. Now what? Similar to that crude example, what about all this action in the middle? Maybe you missed it, maybe you didn't. If you trade the range bound 1, 2, 3, you probably caught some nice trades. Here's a 1, 2, 3, boom. Here's a 1, 2, 3, boom. I'm only looking for new highs or new lows, so I'm not too concerned about what's going on inside this middle. But here we have lower lows. These lows are lower than these lows, so we get new 1 counts. 1, 2, nope. 1, 2, 3. Oh, this one gap below that one right there. We start a new count. Clearly hunting for a bottom or trying to make a bottom. 1, 2, 3. Market gaps higher 2 days in a row. Can guarantee you don't see it on a futures chart, but regardless, comes back and retests, gives you a trend line retest. That's our confirmation to get long gold. How? Buy GLD calls, buy gold futures, buy mini gold futures, buy gold futures options, sell put spreads. Plenty of ways to trade. Trade gold on CFDs if you're overseas. So many ways to take advantage, all right? Delta Airlines. Here's a daily chart of Delta. This is probably becoming redundant by now. Just trying to show you how frequently they occur. 1, 2, 3, gaps up, retest, $4 plus. Here we have a 1, 2, 3 top. Gaps down below the number 2. I don't trade the gaps. I do have some students and members that will trade these, so they're buying puts, selling call spreads, things like that. I'll wait for the next opportunity. 1, 2, 3, we get another chance. Here we trade aggressively down below the number 2. Get a small retest there, $8 plus. Here we have a 1, 2, 3 bottom. Trades higher, pulls back, and then trades higher again. Here's a 4-hour chart of the CAD Swissy for my Forex friends. Canadian dollar versus Swiss franc. 4-hour chart. 1, 2, 3. Also have a double bottom on a multi-session low. Again, those aggressive traders are perhaps taking that initial breakout here above the number 2. Boom. Triggered into the trade, or if you wait for the retest and or the hook back above, you're filled on your 70 pip profit objective. All we do is wait for a chance to get short. 1, 2, nope. 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 1, 2, 3. Here we go. 1, 2, 3. Smaller 1, 2, 3. Breaks down below. Comes up a little bit. Comes down. Hits your 40 pip profit objective. Here is an intraday chart. 5-minute chart on the NASDAQ. Yes, it works on an intraday chart. 1, 2, 3. breaks above the number 2, comes back down, hooks back above, hits our 13-point profit objective. 1, 2, 3, breaks down below, comes up, retests multiple times, gives us a little heartburn along the way, comes down, reach our 20-point profit objective. Finally get a 1, 2, 3 bottom here, likely the last hour of the session. 1, 2, 3. Market breaks above. If you're lucky enough to get filled on that retest, you're filled on your 30-point profit objective and maybe 1 or 2 candles there. So with the invention or introduction of the micros, what has that been, a year or 2 now, by the CME, the micro NASDAQ, micro S&P, micro Russell, micro Dow at 1/10 of the size. Really, really great way to get your feet wet in a live market environment, not get your face peeled. We're trading multiple contracts where you can scale in and out of these things, because obviously with today's volatility and in volatile times in general, you know, the risk may be a little too large in a full-size contract. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. This is the part of the presentation where I ask you, have I fulfilled my promise? Remember when I asked you earlier, I'm going to ask you, have I fulfilled my promise? This is where I ask you that question. Take another swig of water here. All right, no problem, Hank. All right, great. And if you say no, no hard feelings. I'm not gonna take your knees out or anything. You at least have to tell me why, because I don't know how to break it down even easier. But don't worry, I'm gonna show you more examples. All right. So have I shown you enough proof? But wait, there's more. There's more. You knew it was coming. Usually when people say, but wait, there's more, it's not a good thing. But in this case, I can assure you it is. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? Or what if your platform could scan the markets for you and tell you when there's a pending setup? I don't know about you, but I would say that would be pretty amazing. So do you remember the examples we just talked about? Remember I said, hey, remember these examples? I hope you do. It's just a few moments ago. This is that exact same chart we just looked at on crude oil. So you're smart boys and girls, you probably figured it out, but let's talk about what all the arrows and colors mean. Green arrow is your number 1, red arrow is your number 2, blue arrow is your number 3. 1, 2, 3. What about these lines? Well, actually, what about the chevron, the stealth signal? This is not a sell signal. This is not a buy signal. This is simply a visual aid telling you that, hey, we've broken or penetrated below the number 2 low, or we've broken or penetrated above the number 2 high. Okay? So if and only if that happens, you're going to get these 4 lines print onto your chart. What are the 4 lines? Well, your blue line could be considered your entry level or your breakout level. Your red line is your stop or your risk. Your lime green line is what I call TP1 or profit objective 1. And your dark green line is TP2 or profit objective 2. So if and only if we get a break of the 2, you're going to get the chevron print and you're going to get the 4 lines print. Remember, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down. TP2 is 2 times the distance to TP1. What about all these green arrows? Why the heck are we seeing all these green arrows? Because these green arrows are telling us that we're making new lows. New lows, new lows, new lows, new lows, new lows. Once we stop making new lows and pull up, we stop getting our number 1 low. We stop making these higher or these lower highs and pull back. And then we have a 1, 2, 3. This bar took out this low before we broke above the number 2 high. So hence no chevron, hence no lines. Here's that other example that I was talking about. I was getting ready to get aggressive to the long side on this trade above the number 2 high, but the market traded lower, took out the number 1 low. starting the account over. Here's the gold example. Here's your long. Here's that range bound action that I showed you. We don't get any arrows or lines or anything because we're looking for new highs or new lows. Here we start getting those. These lows are lower than these lows, so we're getting new number one counts. Clearly looking for a bottom down here. We get the break above, we get the line print, TP1, TP2. You see we're looking for a new 1, 2, 3 top over here in the top right-hand corner. Here's the delta example. There's a long, there's a short, there's a short, there's a long. Here's the NASDAQ example. 1, 2, 3, breaks below the number 2, hugs the breakout area. His TP1, his TP2. Notice that TP2 actually happened to, hits TP2 to the tick, but TP2 actually happened to be a session low. So now we have a new 1, 2, 3 bottom count. 1, 2, 3, breaks above, hooks back above. TP1 doesn't quite hit TP2, but it's good enough for government work. Shouldn't have lost any money. We get a new number 1. This low is lower than that low. 1, 2, 3. Market just nips its little head there above the number 2 high, so we get the line print. Hits above, comes down, hooks back above. His TP1, notice that while we're waiting to hit TP2, we're getting new number 1s because we're getting new session highs. So that clues us in. It says, hey, we may need to get ready to reverse this puppy. We do actually happen to hit TP2, and then we start we finally get a 1, 2, 3 top formation. 1, 2, 3, breaks down, trades up, rolls back down. It's TP1, TP2, and you see that we're starting a new 1, 2, 3 bottom down here on the right. So is this training for you? You and you only can answer that question. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the paralysis analysis, if you want to simplify your process and just add another strategy to what you're already doing, whether you're successful or unsuccessful, or if you want a very specific step-by-step plan that you can do in a mechanical fashion part-time, this could be for you. So one little story I like to say or tell is when I had this built out, I brought my wife down to my office who teaches ballet part-time. I brought my 2 girls down to my office who were like 4 and 5 at the time. They don't know a flying flip about the markets, trading platforms, etc. I don't even know what I do, but I show them what I was attempting to do with what I just showed you, and they got it. So my point is, if that they can get it, then you certainly can too. Most of us don't remember learning to count to 3 or learning our primary colors, but that's about all you need to know with a dash of common sense. So I do have a very special offer for the first 25 spots for those that are in attendance today. Why do I limit this to 25 people? It's not a marketing gimmick. It's because, as I said at the beginning, I am a human being. I'm not a robot. I actually manage my own inbox. Now, I do have a support staff, but I actually do communicate with my students and my members, and I thoroughly enjoy it. It's where I get a lot of great feedback. So the offer it's the 3S code high-low indicator scan. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We're also going to get the chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. If you don't know what the Discord channel is, don't worry, I'll show you what that is here in a second. But what is the 3S code high-low indicator scanner? Good question. Let me refresh your memory. This is the 3S code. This is a daily chart of CRE. This is the 3S code in action. This is a Thinkorswim chart. Here it is on a daily chart of Bank America. Long, long, long. Nice, easy, clean swing setups. Here's the daily chart of Love, LUV Southwest. Here's a short. It's TP1 to the tick. Here's a short. This one, whoops, bad trade. This is a loser. We get stopped out. Hey, it happens. Here we have a new chance to get short on LUV. Now, why do all the work when you can let technology do the work for you? This is a screenshot of my thinkorswim platform where you see I'm scanning for 1, 2, 3 tops in the Russell 1000, only stocks that are optionable. Hit the green scan button and voila, I get my results. Here's a screenshot of my watch list where I am scanning. I have one monitor where that I've dedicated to watch list, where I'm scanning multiple asset classes and time frames all at the same time, and you can do as well. We've been looking at thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. Kind of teased you earlier with those setups at the beginning. 4-hour chart of Apple. And here's what it looks like on MT4. 4-hour chart of the Euro Kiwi, long, short, short, long, with some moving average overlays. And full disclaimer, there is no scanning component available on MT4 or TradingView. It just simply doesn't exist. But you do get the scanner on, or you get the indicator for all 5 platforms. You get the scanning component only on TS, NT8, and TS. TOS, TS, and NT8. No scanner on MT4 or TradingView. So we know there's no real crystal ball in the markets, but I like to view this as one that provides me one with a daily process. It scans the markets for me, locates the setup, go to my platform for entry, and then manage the trade through the exit. And you can start doing so today with the 3S code. So here's a special offer. It's 3S code high-low indicator and scanner for thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Chart pattern principle, PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this online at these prices. No joke, $19.97, $14.97, and $9.97. But today, as part of this special live webinar special to the first 25 people, we're pleased to offer this for a one-time fee of $397. It's a one-time fee, folks. You own it for life. This is not a renewal, no annual subscription product, no shenanigans, no tomfoolery. It's a one-time fee. And yeah, I will put that into the chat for you. Second. There you go. It's seasonalswingtrader.com/code. It's www.seasonalswingtrader.com/code. It is a one-time fee. I'm going to answer all of your questions. I got a lot of them coming in. I appreciate the interest. Let's talk about the indicator and scanner, just so you know exactly what you're getting into. It's going to include the visual plot of the 1, 2, 3 top and bottom reversal areas. It's going to include the entry, exit, stop, and target levels, all color-coded. Customizable settings, multiple look-back periods. Like I said, if you don't like red, you want hot magenta. You don't like lime green, you want puke green. You can change that. If you don't want arrows, you want circles or hashes, you can do that. Multiple look back periods. That's what I was talking about earlier. If you want to put in a value that will give you more trade opportunities, you have the ability to do that. If you want to expand that value out further to find less, you have the ability to do that as well. You could scan for setups only, meaning those that are in the process of setting up, i.e. have not triggered. Or if you want to look for those that have actually triggered, you can scan for those as well, or do both at the same time. You can scan for tops, bottoms, or both at the same time, as well as multiple asset classes. Stocks, ETFs, futures, Forex. Bonus 1 is a 90+ page PDF manual, chart pattern principle trading guide. You can download this to your desktop. You can print it off, use it for firewood, whatever you want to do. You can learn how to read charts, how to identify trend markets, additional strategies, seasonal strategies, option strategies, commitment traders, order types, and more. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes. Whether you're just learning to trade basic calls and puts to more intermediate advanced, such as condors, verticals, butterflies, diagonals, and more. Bonus 3 is access to our private Discord channel. This is something we launched a couple months ago. It's more of a chat room, not really a trade room, or if you will. but it's open 24 hours a day, 7 days a week. It gives anybody, all members, the ability to post analysis, post charts, comments, setups, ideas, ask questions, what's working, what's not. Hey guys, look at this. Hey guys, look at that. There's a lot of markets that are trading throughout the day, throughout the week, and we simply can't catch them all. So it's a great community for those to post in there as you wish. These are some unsolicited testimonials that I get all the time. I don't ask for them, but very humbled and pleased that people are actually taking action and using the 3S code, actually taking action. That's what's going to provide results. Here's an example of a text that went out using the 3S code. All of these setups are based on the 3S code alone. And I do eat what I cook. These are screenshots of my Thinkorswim platform and my futures platform, where I can do my equity options trades and then my futures trades. You see I've got crude options, cotton options, copper options, yen options, nat gas options in the S&P. In fact, we closed 2 killer trades today, being short crude and RBOB on Friday that, as you know, they sold off over 6% today, and we're able to take massive profits. All right, so here's one last example, just to show you in real time how it works. Easy, clean swing setups here. Top, bottom, bottom, rinse and repeat. So here is the offer again, seasonalswingtrader.com/code. Let me take a swig of water here. I'm going to get to your questions. All right, Jim, are the highs and lows intraday or closing values? The highs and lows those are intraday highs and lows for that session if you're on an intraday chart. I don't know if that answers your question. No, as I already said there's no, it's no renewal. This is not a subscription product, you own it. Yes, you get access to all platforms. We don't limit you to 1 license or 2 licenses. You get access immediately to all these. So I've got accounts with all these outfits here. I don't actively trade on TradeStation or NT8, but I do have, in fact, I have a whole PC dedicated to running Thinkorswim, where I've got multiple time frames, as I already showed you, quotes and charts on Thinkorswim, and as well as my live trading. TradingView, I use that all day, every day. Great platform, it's very clean. And then MT4 for FX. And IntraTrader 8, I'm using a little bit more. I've got funded accounts there, but I'm starting to use that more for like back testing purposes. But yeah, you can have them loaded and installed on all of them and running at the same time. I do have a few other conditions, Andrew. It's a good question. So he says, any other rules besides any new high, new low? Talk about that in the members area. So here's the members area, which you're going to get. In my tech guy, kind of did a new format, so I'm getting used to this. But here's how to get into the Discord area. Here's all of your resources: day trading, understand the indicator, customize the indicator, setting up scans. All of your bonus materials and then some, and then here's all of your installation material. Thinkorswim, we have a little PDF manual here, a video, also did a short video on the free seasonality widget that you can add in Thinkorswim. I don't use seasonality on intraday charts. I do incorporate it some into my swing positions. After all, I am seasonal swing trader, but certainly not necessary. TradeStation, V10, V95, NT8, TradingView, and MT4. All right, so that's what the members area looks like. Let's see here. Yes, Deb, it does work on Thinkorswim. I'm not familiar with Webull. I feel like I may have heard of it, but not familiar with the platform. Yes, James, there will be. So James, don't offer, don't have a direct PayPal link. If you email me support@seasonalswingtrader.com, I'll make a custom link for you. And I guess that goes for anybody, but we don't have we don't actively use PayPal, but we'll work with you. It's working options charts. It will work on anything that can be charted. It can work on anything that can be charted. So I think this goes into Nelson's question about using Rinko. I don't use Rinko. I do. Some of our students do use Rinko, and some Heikin-Ashi as well. I don't use them, but anything that can be charted. If you want to, go back and chart tulips back during the tulip mania, it will work there. So yes, it will work on options charts. I don't chart options personally, but yes, anything that is creating movement, creating new highs and new lows, it will chart. Nathan, you can download this to your personal laptop. Yes, as long as you have one of these platforms installed, or you're able to log into TradingView, which is cloud-based. Yeah, I love the TradingView app personally, and so I'm always thumbing through TradingView when I'm sitting on the couch, and sometimes in bed, or a lot of times when I'm looking at charts and quotes. Does not work on Schwab SSE. I don't know what SSE is, but it does not work on Schwab. It works on Thinkorswim, TradeStation, Intraday, TradingView, and MT4. So I've got people that use, maybe they execute on Interactive Brokers, Schwab, Fidelity, things like that. You can open up a free account with most of these guys right here that I've already showed you, or maybe fund with a very small minimum, $500, $2,000, and let the indicator and the scanner, do all that work for you. And then wherever you execute, you obviously don't have to execute on any of these 5 platforms. So maybe you open your account up with Thinkorswim, Ninja, TradingView, something like that. Find the setup on one of these, and then if you absolutely have to use one of these others, E-Trade or Interactive Brokers, something like that, you can go execute over there. There is a 1, 2, 3 top on the Euro SP, so good. And SP, that's not me logged in there as myself. Yeah, there is absolutely a top on the Euro, and we'll certainly take a look at it. That and the Swiss franc. TradingView, Nathan, to my knowledge, does not. So the question is, do I use TradingView for FX stocks and options? To my knowledge, and maybe I'm in the dark here, does not have options trading, but that's one of the only caveats there about TradingView. But I do use it to look at all asset classes every day. I mean, literally every day. Stocks, futures, forex. I've got all kinds of watch lists, and I'm constantly scanning through them. I still do a lot of this manually. I mean, because it's just what I do, and I enjoy doing it manually. About 30, 35 commodity markets, 30, 35 currency markets, and then really where I use those scanners are across multiple time frames, and then equities, because there's so many different equities. Although occasionally on weekends I will run through an entire weekly option watch list. So the entire list of public weeklies, I don't know how many there are. I will go through those. All right, yeah, let's look at some some charts here. So like the S&P, let's take a look at what's going on in the S&P. So all right, So S&P, of course, unless you've just been, you know, on an island, we've been going straight up, and we just started getting 1, 2, 3 tops, and you can see the last top that we had back there in March. Very successful, nice trade, reversed at TP1. We flipped around, we're able to reverse, get long with the target up here. Told everybody, you know, hey, so this is a 200-day moving average. You don't have to, you can trade as naked as you want. You could trade, have an average, other indicators, whatever you like. I like to have the 200-day because I respect the 200-day. I don't trade directly into 200-day resistance or sell into 200-day support. Now, if I'm a buyer here, which I was, I'm not buying into 200-day resistance. There's like, you know, there's potential, 75, 80% of room here. But what I did say is be cautious of the 200-day. Why? Everybody knows that. That's 101 stuff. 200-day could act as resistance or act as support. So what did it do? Came and banged into it, rejected, banged into it, rejected, bang, reject, bang, reject, bang, reject. Finally got through, and once it did, we hit TP1, and now we're above it, we're now acting as support. So wherever the S&P wants to start, you could look at the SPY, doesn't matter, you're going to see the same pattern. Let's say that this ends up being our number 2 point, it trades up and we get a number 3. Our target is going to be distance of here and here measured down. There's still some meat on that bone, but just note that if your target's down here, don't get greedy. We may pause at that 200-day, and you can see very clearly, just using some common sense, that price structure is lurking down below. So if your target is right here and we stop right here, don't hold out and let the market reverse. You know, that's where you've got to manage your trade. Okay. Let's look at today's action. So we'll go to a 10-minute today. So this is live, real time. There wasn't any setups on the 10-minute. And if you're not finding enough action, you know, to your liking, or perhaps the 10-minute is too risky, like there's too much risk involved because of these large ranges we're seeing, you can go down to say the 1 minute or perhaps the 233 tick. And so we only have this one trade in post market tonight. You know, you can just kind of see going back all these trades, and this is not like me drawing these lines. This is what you will see once you download it onto your computer. Is there a market that this works especially good at? No, I mean, it's really not no particular market that's better than the other. You know, there's a lot of stocks, a lot of futures, a lot of currencies. You know, I would say that you would want some market that is, you know, got some decent volume, some liquidity. I wouldn't trade really thin markets that are prone to gaps. I don't really trade penny stocks either. I don't trade penny stocks. So I've had requests. I don't even know a penny stocks ticker symbol, to be honest with you. But I've had people ask me, you know, throw penny stocks at me, and we've taken a look at it. But things like that, you know, I'd be a little bit leery of. It's just not as clean. There are a lot of setups. So, you know, take the ones that look best to you and what works in your wheelhouse. So yeah, you asked about the Euro USD. So actually you asked about not the Euro currency, but you're going to see the same thing. Let me put Euro USD. So here's a daily chart of the Euro USD, and we have a 1, 2, 3 top, and I would say we also had we almost had a head and shoulders top, but this head I mean, well, we kind of do. So we have left shoulder, neck, head, neck, right shoulder, which is gives us further, kind of validation to the trade, and we're starting to break below. So I like to see, just confluence. And what else do we have? We talked about, oscillators and divergence and things like that earlier. Well, here we've got higher high, higher high, higher high, higher high. But we've got high, lower high, lower high, lower high, lower high. That's our divergence. It's all about just adding whatever you can in your favor. So thank you, John Simmons, Rachel, Tony, NB. I appreciate it. I'll be looking for you in the members area. Let me go back and look here. Yeah, I mean, this is a setup and strategy that I've been using for literally years. And I tell people that I've gone off the reservation, chasing shiny objects. I've seen a lot of indicators, a lot of methodologies, indicators, so on and so forth. And I've always reverted back to this because it's the most consistent for me. You don't really need to change any settings unless you want to, and that's why we did that. When we first built this out, I think we had the settings locked, but your settings, so this is kind of like out of the box, black and white settings here, really set at the lowest level to find pretty much everything. Doesn't mean that I'm going to take every single setup, because there might be, dozens, if not hundreds. It all depends on the time frame, of course. If you're on a daily chart, you're going to find a lot less setups as opposed to, say, a 1 minute chart. But I know that there are people that like to tinker around with the settings, and I do have these on bare minimum. So like this one, the minimum bars between the 1 and 2 is set at 1. I personally like to see more bars between the 1 and 2. So like here, this is 1 bar. I like to see more bars. So okay, here we have 3 bars, but I have it set on the bare minimum because I still want to be flagged or alerted that there's a potential setup limit, and then I'll go and do my own analysis on whether or not I want to take that trade or not. So here's a couple of markets that I'm looking at. CSIQ. I like to see the deeper retracements as well. So you can see these are kind of smaller retracements. This one was printed because we broke. See, we broke below the number 2. But one of my rules, and it's all laid out in the members area. It's not my rule. Doesn't have to be your rule. But what I like to see, I'll just give you kind of a pro tip, is I like to see a solid close below the number 2. I also have these short-term moving averages that I use primarily more on the intraday chart, shorter time frames. But we never get a close below the number 2. That is one of my rules there. Let's see, Huya. So looking at this one as well, here we have higher high, higher high, high, lower high, divergence. What are we getting here? We're also getting trend line break. So if we start closing down below this 25 level, we'll be looking for targets down here at around 20. The suggested target as it stands right now is 30 down to 25, 25 down minus 5, that's $20. And that takes us right into this price structure. I love it. Love it when those things happen. Yeah, you can email me, support@seasonalswingtrader.com if you have any questions about that. It's just a quicker setting on the RSI. I don't get too hung up on it. I think default is 14. I used 5 on a long time on another kind of a price action method that I learned years ago, and it's just kind of been my default, but it doesn't really matter. Market that I started to short today was Nat Gas. Started to short Nat Gas today, but I wanted to get one more day, see if we pull back up to this area. Yeah, so I'll look at the 30-year bond here this is a daily chart of the 30-year bond. If you get into a trending market or maybe a non-trending market, such as the 30-year bond, and maybe you have problems with your patience, and you want to get into the market. Let's just say 30-year bonds. You can go down to other time frames, and you're able to trade these lower time frames. So maybe we hadn't had kind of like the S&P, right? We haven't had technically a trade for weeks or months. But if you go down to the lower time frames, here's a 4-hour chart of the 30-year bond. Here's an hourly of the 30-year bond, and let's see. So you can go down to the lower time frames and find all kinds of opportunity. Yeah, a couple of bottoms. So my list of 1, 2, 3 tops are I don't know about approaching record level, but I have a huge list of 1, 2, 3 tops because of where we are in the market. We made a SH asterisk apostrophe ton of tops lately because of where we are, and now we're pulling back, so we're getting a lot of 1, 2, 3 top on our scans. We get pulled back deep enough, we'll start getting more bottoms. But right now, we're not getting 1, 2, 3 bottoms. I will tell you too, one of the things that I favor on, especially in the equity markets, are credit spreads. Selling put credit spreads, selling call credit spreads. So like right here, depending on where you get in, I would have got long here and immediately went against me. But if I'm selling out of my, the market, depending, anybody can argue, well, you're wrong or you're right. Again, depends on how you manage the trade. But I can sell put spreads and still, bank profits, even though I didn't really get that direction that I wanted, in that particular example. HSBC. All right, so kind of similar here. These talk about this, in the members area. See how far these averages are spread apart. Yeah, watching soybeans. There's not, Scott, no. I don't know what version I am on. Being like software version or what? I'm not sure what you're asking. You're absolutely welcome, Wendy and Todd, Chris D, Christian, you're welcome. You're welcome. Yep. Forward to working with you as well. All right, guys. I think, let's see. Yeah, we'll take directionals occasionally, more so in commodity markets. But I will, depending on my time horizon and outlook, implied volatility, things of that nature. I will buy directionals, but I do favor credit spreads. We'll do James. All right, guys. Well, I think I've gone past my allotted time here. I want to say thanks to everybody, all the new members. I think we're down to like 6 or 7 spots. So if you're thinking about it on the edge, whatever, maybe have questions, shoot me an email at support. I'll get back to you as soon as I can. Thank you for spending your time with me. I love talking about this, teach you the strategy. Apply it, use it, take advantage of it. You still have questions, something doesn't make sense. You can always email me, support at Seasonal Swing Trader. I'd be happy to help you. So good talking to you. Thanks again. Take care. Stay healthy in the markets as well as physically. And I'll see you on the inside. Take care.